What is going on, everybody? This is S Trades, and in today's video, we're gonna be going over ICT concepts and the reality of it. A lot of people trade ICT concepts nowadays. It's like the main thing that everyone focuses about, including myself, honestly. And I kind of want to dive deep in the actual, you could say, harsh truth and the reality of the ICT concepts. So, without further ado, let's get straight into the video. Before I start, if you guys are new to trading or even intermediate traders and have some experience, I highly suggest you guys go check out my bootcamp that I just finished up yesterday or 2 days ago. I uploaded my last video and the bootcamp is pretty much finished, and I guarantee you guys, even if you have experience or you're completely new, everyone's going to benefit in some shape or form. Like, just watch the whole bootcamp and trust me, you're going to get some knowledge that you probably didn't know of before. And to be honest, the bootcamp that I uploaded all for free is what I ended up paying for a mentorship with real money. So I'm literally just providing the sauce for free, and I highly suggest you guys go and do it. So go check it out. I'll have a link in the description for the whole playlist of the bootcamp if you guys want to go ahead and watch that. And let's get back into the video. So ICT concepts, right? I personally trade ICT concepts, so before I even start saying anything, I don't want to look like I'm just talking bad about ICT concepts, because myself included, I trade it and I've got multiple payouts with ICT concepts. So I'm not gonna be saying that ICT concepts do not work, but I just kind of want to get the actual reality of trading and the ICT concepts in general. So you guys probably know there's so many different strategies out there. There's supply and demand, there's trend lines, there's SMC, there's ICT concepts, and all of these different strategies, right? But ICT has been kind of growing lately to be like the main source of strategy for all traders, right? Because most of the famous traders online right now, like TJR and PB Trading, Justin Werland, and all other people, are all ICT traders, so they're heavily promoting ICT concepts, and the strategy is obviously around all of that, right? So obviously everybody that's getting into trading now are kind of having that mindset of ICT is the only way to trade and nothing else. And in a sort of a way, ICT concepts kind of became like a cult nowadays. Like, it's literally like, it's either you trade ICT concepts or you're just a retail trader and you don't know what you're doing, right? No matter if you're an ICT trader or not, you're still going to be a retail trader. You're not going to be those financial banks, no matter how much ICT preaches that, we're kind of following the footsteps of the big banks and institutions and things like that. You'll never actually be able to do that fully, because the way they trade is completely different than us. They don't sit there in like 5-minute charts and try to find some fair value gaps or find liquidity or whatever. Like, that's not how the big firms trade, right? So you'll never be able to kind of replicate the way they trade, but what you will be able to do is kind of follow their footsteps, because when those things happen, when the firms enter trades and things like that, you're kind of able to be following some sort of footsteps by finding those clues, and those clues are things like ICT concepts and liquidity and things like that, right? So, but the reality of ICT is it's pretty much a rebrand, and it's just other concepts from different strategies branded differently and named differently. ICT himself, he's a marketer. He's not an actual real trader. Like, if you guys know anything about ICT, me personally, I don't think he's a profitable trader. I think he just made most of his money, and he admitted that himself, from the courses that he sold before. He went on those international cups for trading and he lost all of them. He talked so much smack on the internet saying how he's gonna win it and things like that. Never won it once, and was literally down bad at the last place all the time. So it's like, ICT himself, I don't think that he's really like a profitable trader, but I wouldn't take the credit off the things that he taught people online for free, because a lot of the concepts that he taught is really, really valuable, but the concepts that he taught wasn't invented by ICT himself. Like, things that he said, for example, fair value gaps, liquidity, low resistance liquidity, market maker, buy and sell models, all of that was already here in trading before, and it was just named differently, right? He just came in the industry and kind of put his own label onto things and just said, all right, this is what it is, and this is the only way to trade, right? And that's how people kind of started learning about it. Be like, all right, fair value gaps, liquidity, trend line, low resistance liquidity, things like that. That is the only way, like, to trade, right? These are the only things that I have to look at, and there's no other way to trade. Trust me, guys. There are people that are trading trend lines, people that are trading supply and demand, people that are literally just freaking taking trades off of freaking moon cycles and things like that and still are making money, right? There are so many different kinds of ways of trading. Trading is that kind of a thing where you have to really find a strategy that makes sense in your head. And if it does make sense in your head, that would pretty much make you the most of the money, right? Because I could be teaching you a strategy using ICT concepts and it doesn't make any sense at all to you. And no matter how much you try, it will just not make sense to you and you will not be able to replicate the way I trade, right? So same thing with different people, right? If, for example, for you, you understand trend lines in a way better, or if you trade, let's say, or if you understand supply and demand better, support and resistances, like if that's what you understand more, and if that's what sits right with you and you have a proven strategy, right? Because there's one thing of being ignorant about other strategies, right? So let's say if you're trying to learn something and then there's like ICT concepts, there's supply and demand and all the other strategies, and you just want to only stick to one and not even look at any other, that's just straight up being ignorant, right? But like if you actually take your time, look at all the different strategies and see what makes sense the most to you without having any sort of bias. Like if your friend trades ICT, doesn't mean you're going to have to go and trade ICT yourself, right? Because like I said, people trade trend lines, people trade support and resistances that make so much money probably than any other ICT traders that make money now, right? So any strategy in the market works as long as you could prove that is profitable over the long run, and as long as you can make it work with proper risk management and you having proper psychology for it, right? So let me give you a few examples so you don't think I'm just making things up, right? So first things first, fair value gaps, right? That's like the main thing in ICT concepts, and that is the main thing that I use personally, right? So again, I'm not talking down on ICT concepts, but I'm just kind of saying the reality and the truth of the actual ICT concept, right? So fair value gaps are straight up just low and high volume nodes, right? If you guys know anything about order flow, low and high volume nodes is pretty much where there are two sides of the market, right? There's the ask and then there's the bid, also known as the buyers and the sellers, right? And whenever there's like an imbalance of buyers and sellers in a certain point of area in trading, right? So let's say there's a 15-minute fair value gap over here. If you go and you want to see actually what's happening inside that 15-minute fair value gap, you can go on order flow and actually look at, like, for example, the footprint chart, right? And you could check what's happening inside that gap, right? So once you take a look inside that candle, you will start to see that there are certain buyers on the left side and there's sellers on the right side, and then there are certain imbalances where one side of the market is being more aggressive than the other, right? So in a sense of a fair value gap, let's say now bullish fair value gap, right? There are going to be times where there are more aggressive buyers in the market, right? So you're going to see more people hitting the ask, more people are actually present on the left side of the market, right? That's where the more buyers are, right? So that is pretty much what a fair value gap is, right? This was known already way before ICT even introduced fair value gaps, right? Low volume and high volume nodes, right? So this is already a thing, right? It's just rebranded to fair value gaps, right? Now, I'm not saying that fair value gaps do not work. They definitely do, and in my opinion, that is the best ICT concepts that you can learn is fair value gaps alone. If you learn them and you master them, that's literally all you need, right? Like that, you don't really need anything else other than that, right? Now let's move on. Order blocks, right? What are order blocks? Order blocks is literally just supply and demand. Like if you look at any people trading and teaching supply and demand, it's literally just order blocks. Like anywhere you see like a candle that made a massive impulsive move, right? Price tends to retrace to that level, either hit the body or the wick of that candle and then get off a reaction off of it, right? So that is literally just supply and demand. Supply and demand been here, been there, like people are trading it till this day. And yeah, order block is simply just supply and demand. Low resistance liquidity is just straight up trend line. Like it's literally trend line liquidity is even in the name, right? People that trade trend line is pretty much people that are trading low resistance liquidity, right? For us ICT traders, we look at low resistance liquidity as something that you could target, right? For example, if they're like continuously stacked lows, right? They're very close to each other, not a single one got, tapped into. And in our minds, we're like, all right, eventually we want to see that low resistance liquidity get taken out, and whatever other conflicts that you might have. Let's say you're taking a short and now you're targeting all of that low resistance liquidity. And on the other hand, people that trade trend lines, all they would do is they would wait until one of that quote unquote trend line breaks, let's say a retest or whatever, and then they would short along with it and then target again all of these lows known as low resistance liquidity, right? And another thing, market maker buy and sell model. That is simply just the Wyckoff theory. If you guys know anything about Wyckoff, he's been way before ICT himself, and he's already been introduced how the market moves, right? He introduced how market pretty much moves in different cycles, right? First, we have like a sell model, just like in a market make a sell model, right? We have lower lows, lower high, at lower lows, lower highs, right? Continually going down, right? And at some point, we're gonna kind of start to slow down, consolidate, and then eventually we're gonna have a reversal, and then we're gonna be following through, higher highs and higher lows, and breaking structure to the upside. That is pretty much just a market maker buy model, right? So I just gave you guys like 4 examples of ICT concepts and things that to look for, right? So all of these concepts already been around the block. They already been here way before ICT introduced them with his own names, right? So don't get it confused, and don't kind of think in a way of like, all right, if I don't trade ICT, I cannot be profitable. It's like a thing nowadays where a lot of ICT traders will be talking down, on other traders that, for example, use trend lines or trade support and resistance, supply and demand. Now, all of these things work, like I said, in a market where there's so many different factors. Literally any strategy could work. I know people that literally trade off of freaking, you guys probably also know him, Banca, literally trade off of goddamn sunsets. Like sunsets and sunrises. Like, bro, like you could literally make anything work. That's how crazy and weird trading is, because in the stock market, whatever you could find that is profitable over the long run, and you could, have proper risk management and have proper psychology along with it, you could literally make anything work. You could literally just buy and sell discretionary wise, right? If you have like, I don't know, 10 years of experience, you could just straight up trade discretionary. I know people that do that literally have no sense of like mechanical system. They just trade discretionary, right? They just look at the market. They'll be like, all right, I think over here we're going to go down. They sell. Like, okay, now I think it's going to go up. They buy. Straight up just discretion. No mechanical stuff. No fair value gaps. No supply and demand. None of that. Like literally just straight up discretion. Now again, the reason why I'm saying all of this is because I don't want to have a community where people are just like straight up ICT codes, ICT mindset. Like, yo, this is the only way to trade. There's nothing else. Like they're literally praising ICT. First of all, like I said, ICT not profitable himself. Many times during his lives, he got freaking exposed trading on demo, and lied about it. Got exposed multiple times, continuously, even lost on demo. Like, I'm not again talking down on ICT. The things that he taught is definitely very helpful, but ICT concepts is not the only way to trade, and most of the ICT concepts are just rebrands of other concepts that have already been around us. Like they've already been here way before ICT came around. So don't think fair value gap is something that ICT invented. Don't think market maker buy and sell model is something that ICT invented. It's already all been here, right? That's kind of the harsh truth and the reality of ICT concepts that not a lot of people want to accept, right? They're like try hard die fans of ICT. Like whatever ICT says, they agree with him, they praise him. Like, no, it shouldn't be like that, right? And again, I'm not saying ICT concepts don't work, and it might look controversial because I look like I'm talking down on ICT concepts when I personally use them, and my whole bootcamp was revolved around ICT concepts. The reason why I'm saying is because it's what made sense in my head. The mentorship that I got was with ICT concepts and with IFGs, right, inverse fair value gaps, and that is kind of what stick with me the most. I tried order flow, and in my opinion, I still believe order flow is like the number one way to kind of see and trade the markets, right? But it's a little bit more on the difficult side. You have to have a lot more discretion and a lot more experience with order flow, because there's a lot of discretion that goes into it. There's a lot of things that we have to kind of not guess, but you kind of have to use your own thinking into it. Be like, all right, well, there might be certain buyers and sellers here, but they might be trap buyers, they might be trap sellers, things like that, right? And again, I really think that order flow is the king of trading, right? But ICT concept is what makes sense most in my head. My type of personality is where I want things to be very mechanical, right? I want have like a rule book of things that I need to see in order for me to take a trade, right? So for example, I need to see like a liquidity sweep, or I need to see a tap into a high time frame PDF rate, right? Like a 4 hour, 1 hour, 30 minute, 15 minute fair value gap. Then I want to see obvious draws on liquidity and just a simple inversion fair value gap to enter and target those levels, right? So that is like super mechanical, and that is what makes sense the most in my head. And the more mechanical I can make my strategy, the better it is for me specifically, because it kind of eliminates all of the guessing. It eliminates all of the trying to see like, well, is this gonna work? Is that gonna work? Do I think that this is gonna happen? It eliminates literally all of the thinking, right? In my opinion, that is the best for beginner traders, and that is the best for you to try to do it in the long run. obviously you will build the discretion with experience and with years in the market, right? And that's when you can start applying your own discretion into the market, right? For example, if you have the mechanical model of ICT, whatever strategy you have, for example, if you use my inversion model, right, you could have that inversion model and you can apply your own discretion into it. For example, there's a certain flag gap that ended up getting inversed, but you're not going to take that trade because of your discretion and because of you thinking that this is not a plus here, because you've seen this thing happen before and you've seen this trade fail multiple times, right? And you're only going to get that through years and years of experience in the market, right? So yeah, that's about it, guys. This is it for this video. I just kind of want to talk about the harsh truth reality of ICT concepts. And yeah, if you guys, again, new or even experienced traders, the link will be in the description for my free bootcamp on this YouTube. I finished it up all now and it's totally free, no charge or nothing like that. And if you guys have any more questions regarding my bootcamp, or if you have any other questions and just related to trading, or even any other questions that you might have, join up my Discord. Again, the link is going to be in the description, and I will see you guys in the next video.